you an overview of our IT spend, which in 19, in both in capex and opex, we were spending around 2.7 billion, which over the period increased, and you can see a lot of spending since 2022. So in 2022, we spent like around 5 billion, then in 2023, 7.5, and in 2024, 10.229 billion. So year on year, the increase can be seen on our IT spend, which is one of the area of our focus, where we are spending a lot on our infrastructure and on our IT softwares. We have recently upgraded our core banking solution also. Next, please. Thank you. So thank you very much. This is I just wanted to highlight our performance in December versus 23, and then in half year 2025. And I've just given you an overview of the bank. If you have any questions, yeah.
Okay. Thank you, Mr. Sethi, for the detailed presentation. We'll now open the Q&A session. Just a few housekeeping rules. So if you want to ask a question live, you can use the raise hand button. Alternatively, you can also use the Q&A chat box to type your questions. Kindly identify yourself and your company name before you ask a question. So the first question we have is from Mr. Saklan Paracha. I'm allowing you to talk. You can now ask your question.
Assalamu alaikum. Am I audible to you?
Yes, you are.
Yeah. My question is regarding pension litigation case. There is a recurring expense. Last CBS management was highlighted that there will be a recurring expense of around 10 billion. So what is this recurring expense? I would like to know, please, your comments.
These accounts, we have taken the 5 billion impact up to June. So the recurring impact is there in the numbers, and even with that, our cost income ratio you can see is around 37, which is a very good ratio by any standards. So the impact is already in there, and recurring cost has increased.
Thank you. I have one more question regarding the New York penalty case, as it was on HBL as well. But there is a second liability case on HBL as well. Can we expect same for NBP?
No, we have already closed our.
I'll answer that. Then, if you don't mind, I'll step in on that one. The New York case, I assume you're talking about Saklan Sahab, the litigation at HBL regarding that case. That has been over since, I believe, 2023 for us. We don't have that anymore. That case is over.
Oh, thank you so much. I have one more question regarding the payout ratio, dividend payout ratio. What type of payout ratio can we expect at the end of this calendar year? Just an overview, just a range, not I'm talking about the real.
I think we returned to the dividend market in 2024, and if you take a look at our dividend payout percentages, it was broadly in line with the industry based on our earnings. So, I mean, if you're creating an expectation, take a look at that for yourselves. I don't see us deviating much from what the industry standard was as a minimum for what we can look at. Then we have extra capital, so we have a lot of capital, so we have the luxury of disbursing, but it's eventually a call of the board and a review of what our at that time our future capital needs will be.
Thank you.
Is that good? Thank you, Paracha sir.
Thank you. Thank you.
Okay, we have a couple of questions in the chat box. The first one, you have two questions from Waqas Ghani at JS Global Capital. He's asking, firstly, what is the cost on the current account remunerative deposits? And his second question is, does National Bank earn anything on the CA kept for CRR with CRR? Since it's supposed to be kept with SBP, do you transfer profit if you earn anything on these current accounts? So those are the two questions asked by Waqas Ghani from JS Global Capital.
It is yours.
Our cost is around in single digit. It's around 7-ish, 7 or 8. Around. I'll just confirm you the correct exact number. And for the second part of the question was about.
He's asking if we earn anything on the current account kept for CRR with SVPs. Yeah.
No. State Bank does not give any return on those kept there.
Okay.
The deposits there as SLR or CRR
the total deposit
given any.
I think current account. I think the question was about deposit cost or current account cost. I wasn't clear.
Okay, there is no cost on the deposits. If you are asking for the deposit cost, there was no cost. And the State Bank does not give any return on those kept there for the regulatory requirement.
I think from what I understand, he's asking any deposits kept for CRR. So basically, that's clear.
Yeah.
Okay.
Yeah.
Thank you. Okay, the next question we have is in the chat box is from Fiza Ejaz. She's asking, what is the fixed portfolio duration and yield on it?
I've already informed it 2.74, and it's around 14%. The yield is around 14%. 13.96, you can say around 14%.
Okay.
And duration, we've given one of the slides, if you can bring back, it's 2.75.
Okay. Thank you.
74.
Okay. The next question is from Akshay Thakur. He's asking, are there any potential floods impact on advances?
I think you please, President sir.
I think first of all, it's too early right now because it's just the floods have just entered since, and it's an evolving situation as rains are continuing in certain parts of the country. However, if you look back to 2022, the flood situation then and now, it was not a very large impact on bank earnings because of that. Because at which point there will be measures taken by the banks themselves as well as the state bank and the government to figure out how to deal with these floods and the impact of them. So yeah, it's too early to tell on this one, but experience tells me that they will. The last time it wasn't that much.
Thank you. Okay, we have one more question. It's an anonymous one, but I'll just ask still. The person's asking, the car went down by 52 bips since December. Is there any one-off adjustment? I think this was covered in the presentation, but maybe Seti Saab, you can just repeat the answer for that.
I've already informed that State Bank has recently advised to adjust the car with the impact on AFS portfolio by taking the market risk on it. Previously, the banks were not taking any market risk as per Basel on it. So the State Bank has given 3 we have to take impact in next 3 years. So the bank has already taken in its June half impact of it. The rest we will take in the period allowed. So the number with the profit and that adjustment, which if you want me to be precise, it was around 3.5% impact on the car. That is the number we had to adjust. 3.5, 3.6 around. So it depends on your balance sheet when you take that impact. So that was the kind of impact has been already been taken. And with the kind of profit we had, we even with such a big impact, we are almost at the same level as of December. So this is I'm not aware whether other banks, because they can take the impact till December. They have taken in their June accounts or not. I'm not aware of it at present. So we have taken half impact already. So
I
50%
I think
impact is there.
Seti Saab, the State Bank has advised all banks to take this impact,
Yes,
and over a period of how many years? 3 years?
3 years. 3 years.
3 years. So 33% of that impact was supposed to be taken by all banks, depending on
Yes,
their book. We
and we
took
have taken.
50%
Yes.
as a matter of prudence.
Yes.
Okay. We have a few more questions in the chat box. There's one question asking about T-bills and PIB yields. I think it is in the presentation that was run through, but Shetty Saab, if you want to make a comment, you can.
Uh, I've given you the average yield is around 13.96% on the investment. I've already informed about that. And so if that is what you were asking, and if you want to know the cost of deposit, it's around on the local is 8.46%. So the total deposit cost is 7.59. I informed it earlier. So this is the cost of
Sure.
deposits, and the yield of investment I've informed you.
Okay. Maybe this question from Umar Hayat Taj, the President Saab, you can answer. He's asking if the bank expects the same deposit growth momentum in the next few quarters.
Inshallah.
Oh.
I put it this way: there is a focus, is apparent with our peer group, on increasing the current account deposit and deposits overall. That is there. We will continue that. It is evident in the first half of the year, and this is expected to continue this momentum and increase. So yeah, but I'm not giving a number right now on where we should be on the deposits by 2025 year end or further on. We are working on this because it's a little new for the bank to have, and it's part of when I do wrap up, that this is the kind of stuff we will talk about. But there is a transformation strategy underway, and this is a major part of that.
Sure. Thank you. We have a few more questions. The first one, there's a question on that your net advances contracted by about 6.9% in the first half. At the same time, stage 3 provisioning is already very high. Is this a contraction? Is this contraction a signal of systematic credit demand weakness or a deliberate pullback in lending to risk management?
No, I think part of it, I'll be candid on this. You have to keep into perspective. Year end 2024 was also the year, was the end of the period where the ADR ADR tax was relevant. So the balance sheet had been adjusted. We had worked on the balance sheet to minimize that ADR impact. In my last investor conference, we had mentioned that we will not, we will continue to act in terms of encouraging deposit flows to the bank. But we had done some advances driven by the ADR consideration. However, there's no deliberate pullback. Credit demand remains what credit demand is, and we continue to service our customers for credit, which is evident from our focus areas, which is agriculture, SME, where there is growth, as well as in the corporate segment. So we work on that continuously, and we will continue to see growth in that. And I think 2025 year end, you'll see a return of a lot of these advances numbers by that time. And now that the ADR issue is over, you'll see much more clearer picture on both advances and deposit growth, which is already evident in the deposit side growth.
Thank you. A couple more questions. This is on deposits. Your cost of deposits fell sharply to 6.8% versus 12.2% last year, largely on the back of the SVP rate cut. Obviously, markup income also fell 27%. With PIB floaters now 75% of your bond book, how do you expect NIMs to evolve if rates continue to decline?
Look, so as is evident, you see the top line decline primarily driven by a fall in the policy rate. But you're also seeing a higher benefit coming in from the cost of funds because if you will recall, at the end of 2024, the State Bank also did away with the minimum deposit rate for certain categories of customers. And that sharply improved our cost of deposits because before that State Bank circular, we had to pay minimum deposit rates to all those customers which the State Bank later excluded. And that was kind of hurting our net interest margins. But now, since December, when that is no longer in effect, the benefits of that are evident in the NIM increase because we already have a large corpus of deposits from those customers who are no longer being paid MDRs, and those are the minimum deposit rates, and they continue to remain with us. As we remain competitive on the rates, but at a lower level. So that's why you see an overall reduction in cost of deposit, which is working into both the NIM and the bottom line.
Thank you. The final question we have, in fact, we have two more. So there's this question that significant portion of your non-markup income in 24 and 1H came from capital gains, including the FVOCI reclassifications. To what extent can investors expect earnings to be recurring, these earnings to be recurring? And how do you plan to diversify income streams to sustain profitability without relying on one-off items?
Oh, okay. Fazan, can I request you to go back to our portfolio slide, which is part of the presentation, if you can? Farhan?
Sure. Ali Raza, can you go back to portfolio slides?
Yeah. So if you take a look at this, right, and I think it's a great question about sustainability of the income stream. So if you take a look at this, I would draw your attention not just to the T-bills and the PIB book that we have, but to the two items over here, which really are of significance for you. One is the foreign bond investment book, as well as the equity investment book. And what you will see there is a fairly sharp availability of capital gains. The equity book has a very healthy capital gain element there, but this comes through the OCI because the equity, most of the equity investment book resides in the OCI portfolio, and you can take a look at the 6-month accounts to look at how much lies there. That if you take a view on the market, which we are taking a view, and we periodically, obviously, do our capital gain booking, etc. There is that in return on in that investment feeding into the cap equity directly through the OCI realization book. That is fairly sustainable because if you take a look at a time-based series, we did come into this equity investment. We built up our equity investment book at a fairly low level when the index was low. And now, obviously, we trade and etc. a little bit, but really it's a matter of taking a view on the market. And all of the investors here are better placed to see how good or bad we were on that, and also where the market is going. The second part is the foreign bonds. These are the euro bonds that we own, the Pakistan euro bonds with a 2026 maturity and then later maturities. But they've really re-rated up. And in 2026, we expect them to mature. If, inshallah, if Pakistan returns to the bond market at some point, we will continue the investment part. But I think you will see that realization of any gains that accrue from the 2026 maturity feeding into our OCI book as well. So those are the areas where we think it's sustainable, and we will continue to do that because historically, National Bank has been active in both the euro bond market as well as the equity investment market directly. I'm not sure how the peer banks' portfolio asset allocation is it comparable or not, but I think we bring that to the table as a potential upside on earnings, which maybe some of the other banks would or would not. You'll have to take a look at it yourself on that area. But we will continue to do it, and I think it's been a sustainable income source from there. Otherwise, obviously, the market, T-bills, etc., and the availability of the ability to leverage remains with us. We are not highly leveraged. We are at about 3.7 leverage ratio. We could leverage ourselves a little more, even if interest rates were or spreads were coming down a little bit. But we will be able to sustain our income in this the low interest rate environment even.
Thank you.
I hope,
Yeah, that answer is very comprehensive. Thank you so much. Last two questions. One question is from Fiza Ejaz. She's asking, is there any repricing of the investment portfolio expected in the second half of the year? And I will just give the second question also so we can conclude it. It's what is the current cost of FCY remunerative deposits for NBP?
FCY. Sethi can answer the FCY part.
Okay, FCY, it's 3.3. The cost of remunerative foreign currency deposits cost is 3.3%. And repricing is part as you take your position 6 months, and those portfolios which are in 6 months like T-bills, there will be some maturities coming up in the second half.
Okay, thank you so much. We don't have any further questions. I'll hand it back to the President Saab for his final sort of concluding comments and thoughts.
Thank you.
Thank you. Thank you for being such a great master of ceremonies and a moderator in this. So I'd like to conclude or talk about the looking forward, right? So it's The flavor for this is evident in the first half accounts as you compare them to the past years. Um, so where have we, what have we done, right? And where we see NBP going in terms of profitability and more than that, sustainability of income. So what has been important for us is we've obviously focused a lot on the prudence of the balance sheet management. We have taken our views on the tenors of maturity, as well as, i.e., the durations, as well as the asset allocations on the investment side, plus on the liability side, focused on the structure of our deposit base to bring our net interest income up, and we continue to work on those areas. The cost management is obviously evident. We are one of the lowest cost to income ratios now in the amongst the peer banks, and that is something we are very proud of. But at the same time, what it does for us is gives us space to further focus on where we do want to incur costs. And I'd like to put that in perspective. As you can have seen in the slides, there is a transformation, broader transformation taking place in the bank, which is in three areas I would say we are working on. First of all, branch level upgrades. Both physical infrastructure, we've already done about over 250 branches have been upgraded in terms of physical infrastructure, look, feel, etc. So we are transforming ourselves into a bank which is perceived to be and is open to the public. Previously, we were very focused. We were perceived as a government's bank. So government deposits, government payments were coming into us, and we were focused on that. But I think now, from an overall perspective, we are changing how we are positioned in the market to being a bank which serves the populace. With 1,500 branches, we are confident that we have the spread. Now we're working on the service quality and the perception. Secondly, we are heavily investing in IT, both in terms of being able to handle the digital transactions, which is evident from the slides that have been part of the presentation. And the fruits of that are the growth in the digital business. We have upgraded our ATM networks, our computer networks, and our core banking application has been upgraded by April 2025. So now we are state of the art on that area. And we have also invested heavily on marketing spend to become much more seen in the public. And that is the way that you can that people can the evidence of that is our increased social media presence as well as advertising, etc. Essentially, the bank is going to move to become a bank focused on having a product menu which caters to the financial needs of the people of Pakistan. And that we feel is the core of our transformation. And in that regard, we are in the process of launching new products. We launched last year retiree saving product. This year, we've already launched the women's account, the women's account and the card, and the journey in both products and all other products are being revamped for this purpose. Our focus remains obviously on in the lending side on increasing our agriculture portfolio as well as the SME book. We don't see ourselves continuing to be completely dependent, or what was perceived to be the bank which undertakes only government level transactions. We are in that area now where we are looking at individual loans and credit to the people in different walks of life. That's why our um, advanced salary product, our gold loan product, our agriculture loan product, and our SME lending has grown considerably. This does not, although, detract from the fact that we are uh, the largest public sector government bank in Pakistan, and that in itself gives us a certain number of roles which we will continue to fulfill, be they the chest operations of acting as an agent for both the government and the state bank. And those are areas we will continue to work on, but we are essentially diversifying our product menu to diversify our income streams. And that, in effect, gives us a very large potential to grow in those areas and grow our income. And that is essentially where we are transforming to, or pivoting from a government bank to a bank for the people. So that is where we are, and I think all of that gives us a clear growth story. And with the very significant capital that we have, we don't see this to capital to be a constraint for our growth in those areas. In fact, it's an asset. It's an asset for, or an underlying area underlying the capital. The large capital is very important for our growth in the areas that we are targeting, because that gives us a risk appetite that we perhaps have, which a lot of peer banks can perhaps dream of right now, without impeding our future dividend capacity to give dividends. So that's in a nutshell what we are heading. We're looking forward to. Farhan, thank you. If there's any more questions, I'm open to that.
Thank you so much for this very comprehensive outlook. And I think we can now conclude today's session. We wish NBP, again, congratulate them on a very solid first half 2025. And we wish National Bank very strong finish to the end of the year as well. So thank you, everyone. And thank you to the participants for joining and asking questions. We look forward to welcoming you in the next conference. Thank you.
Thank you. Thank you. Thank you, everyone. Thank you for supporting National Bank.